Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock. With news, financial markets have decided there are no economic adults in the room in China's ruling group and are moving to decrease their exposure to the Middle Kingdom. First, almost 20% of the members of the American Chamber of Commerce in Shanghai said they were decreasing their exposure to China, and on Friday, Hong Kong equity investors took it on the chin with an ugly 3.7% drop to cap a loss of 6.5% for the week. Shanghai was tough too, falling 2.3% on Friday for a 3.9% fall for the week. And over the weekend, reports emerged that the giant Foxconn facility that makes iPhones in the Han province, one that employs and houses 200,000 workers, has a serious pandemic outbreak, forcing a lockdown on the facility and causing great distress. Further, some key commodity prices sank rather sharply over the weekend. That included iron ore, zinc and steel. Copper remains in the doldrums. The immediate drivers of these retreats are lower prospects in China. And Japan unveiled an economic package worth about $200 billion to cushion their high inflation from households and some businesses who are struggling under the impact of a weak yen. In the US, and following the first positive estimate of the US third quarter GDP growth, the follow-up PCE inflation rate has been released and it is unchanged at 6.2%. The same data shows consumer spending remained robust, growing at 7.2% and above the related inflation level. Personal incomes rose at an annual rate of 5% and higher than was expected. Perhaps more important than the monthly September numbers are that none of these metrics seem to be falling away. Wall Street liked what it saw, more or less validating Janet Yellen's recent comments. But not all Americans appreciate the current focus on tackling inflation. Pending home sales were down a massive 10% in September from August, and down more than 30% from a year ago. German inflation is getting worse. The latest harmonised reading has it at an eye-popping 11.6% in October, driven by energy costs up 43% and food costs up 20% in a year. The US Treasury 10-year yield starts today unchanged at 4.01%, but down 21 basis points in a week. And the price of gold will open today at $1,646 an ounce, and it's up $4 from this time on Saturday. And oil prices start today up $1 at just on $88 a barrel in the US, while the international Brent price is on $94 a barrel. And the Kiwi dollar will open today at 58.1 US cents, and that'll change from Saturday. Against the Australian dollar, we're firm at 90.7 Australian cents, and against the euro, we're unchanged at 58.3 euro cents. That means our trade-weighted index starts today at 68.4 and also a little changed. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. And that was 90 at 9, brought to you by interest.co.nz.